RHB Investment Bank is expecting some trading opportunities ahead for the real estate sector, with Putrajaya likely to make an announcement on the Kuala Lumpur-Singapore high-speed rail by year-end. Its analyst Long Kok Wen said in a note today that based on her checks with some infrastructure industry players, the government is likely to make an announcement soon. Assuming the previous proposed alignment is unchanged, she said the major beneficiaries would be Sime Darby Property, IOI Properties Group and Matrix Concepts Holdings. She also noted that companies with large land bank in Iskandar, Malaysia may also benefit over the long term. This will be due to the materialization of the rapid transit system, which will be completed in 2025-2026, ahead of the high-speed rail project that's set for completion about 3 years later. Overall, though, the property sector's fundamentals are still not strong yet, with sales to grow at a modest 10% next year after an estimated 20% to 25% dip in 2020. She has buy calls on IOI Properties with a target price of RM1.21, Masing Group, target price RM1.09, Matrix Concepts, target price RM2.22, and Sime Darby Property, target price 88 cents. CGS-CIMB Securities believes that GE15 is likely to be held in the second half of 2021 once the COVID-19 pandemic subsides and if the country is able to control the spread of the outbreak through a mass vaccination program. CGS-CIMB said in a note today that Prime Minister Tan Sri Muhyiddin Yassin had indicated in his speech last month that a general election would take place once the coronavirus was brought under control. The research house said this could lead to profit-taking due to uncertainty in the potential outcome of the election. But the stock market performance immediately after the elections, it said, will be largely determined by the degree of selling pressure during the campaigning period and the actual polling results. It said if the selling pressure is intense in the 2 to 3 weeks before the polls, it would mean that most of the potential bad news would already be factored in the share prices. If the new government holds a stronger majority in Parliament, the market is likely to stage a relief rally. CGS-CIMB said its tracking of the past 9 GEs revealed that the FBM KL-CI tended to deliver higher average returns of up to 12 months post-elections compared to the 12 months that precede the polls. It has a year-end target of 1,759 for the KL-CI. Despite 427 out of a total 7,004 employees testing positive for COVID-19, Kossan Rubber Industries founder Tan Sri Lim Kwang Sia expects the impact to be less than 2% of the group's bottom line. Lim confirmed with theedgemarkets.com that only one site out of the group's 6 locations, or 25% of its total output's volume, was affected by the outbreak. This is because the impact on production is only for 2 weeks. According to Kenanga research analyst Chu Peng Kun, Kossan told analysts in a briefing yesterday that the group conducted a voluntary COVID-19 screening test at its glove division from December 4th to December 10th. Out of a total 7,004 workers, 5 out of 6 locations registered 0 cases, with the remaining 1 site reporting 427 positive cases out of 2,104 employees. Citing management's guidance, Chu said the factory had stopped its operations for sanitization, which has since been completed. He also said that presently, the other 1,667 workers are undergoing quarantine and will undergo a second round of testing today and tomorrow, with the results expected to be released on Friday. Subsequently, he said the group will undergo random sampling for an antigen test for asymptomatic workers every 2 weeks. Chu maintained his outperform call for Kossan with an unchanged target price of RM9.36. Masing Group is looking at listing its manufacturing division, which includes its new rubber glove business in Hong Kong. At a briefing today, Masing Executive Director Datuk Stephen Ng said the group is exploring the possibility of the exercise within the next 5 years. Currently, its manufacturing business comprises the existing plastics and gloves manufacturing segments. The division is 100% owned by Masing and as such would be under separate management under the new tentative listed entity. The manufacturing division also has aims of producing other medical devices, which will be parked under the entity if it ends up being listed. According to Ng, earnings from Masing's new rubber glove business will come on stream in FY21 and contribute more than a quarter of its total net profit. As it currently stands, 95% of Masing's net profit is derived from its property business, with the balance coming from its manufacturing division, which is still concentrated in plastics. Kumpulan Kenderaan Malaysia has ceased to be a substantial shareholder of Consortium Transnational after selling 20 million shares, which is equivalent to a 4.96% stake in the bus operator. Transnational said in a stock exchange filing that the shares were sold on Monday. It did not disclose the transaction price. Its share price settled at 17 cents on December 14th, which would value the lot it sold at an estimated 3.4 million ringgit. KKM is now left with 9.31 million shares or 2.31% in Transnational, which slipped into PN17 status in April. The bus operator's shares, which were trading at an average of 4 cents apiece in mid-August, spiked to as high as 25 cents in late November. Since then, the stock has declined, closing today 3% lower at 16 cents for a market cap of 64.4 million ringgit. Still, it is up 65% from when it was at 10 cents on January 2nd this year.